like if you're in CPG, right, and the economy is tanking you, like what kind of advice are you going to get from an investor? Are they going to tell you change your systems right away, or things are drastically going to affect the performance of your business, or are they going to tell you, maybe get rid of inventory? Like those are the things that you have to think about when you have an investor in your company.
Welcome to 7 to 8, our special series on 7 to 8 figure entrepreneurs. In this special series, I interview $1 million, some $10 million, and even some $1 million business owners who uncovered their twists and turns in their entrepreneurial adventure in order to help you to avoid the potholes and stick to the fast track. Welcome now to center stage, our next special guest. Hey there, peeps. This is Michelle Nedelec, and I am super glad that you're here to join us today because I am here with my most amazing guest, Alejandra. And Alejandra, thank you so much for being here with us today.
I am so excited, Michelle, and thank you for having me. Looking forward to the conversation.
Awesome. So let's start with a quick introduction of who you are and what you do for business.
Yeah, so for everybody there that's listening, my name is Alejandra Santos. I am the founder and the CEO of Startup Tandem. I am just your normal entrepreneur, full of fear and graciousness, just, helping other entrepreneurs with their fears as they build businesses. But basically, on the very gist, I come from a very entrepreneurial family. And this is why I created my company. I've been in finance and accounting for 16 years now, working for other big companies, banking institutions. And it's because of that experience and what I have seen that makes, breaks or makes a business that I created my own company, which is basically supporting entrepreneurs in all things like finance, accounting, taxes, and we kind of scaled it into human resources as well for the more established businesses out there. So that's basically who I am and what we do.
So I am going to slowly break those down because it was a high level. So let's start with, how did you get into the accounting side of things as your field of choice?
So it wasn't a field of choice, actually. It's very interesting. Thank you for the question. I graduated in finance back in 2008, and I had a very good financial position in New York in a financial institution. But with the whole market crash, I kind of, there was no room in finance to hold a stable position. And obviously, I'm not that type of person that mommy and daddy gave me, support, or any family member gave me a hand to eat from. So I had to figure it out, what is the next career or what is close enough to what I do that can, put me in a very stable and secured position. And that was accounting. Because, when the economy crashes, that is the one industry that will flourish 100%. I learned that back in 2008, 2009. So I rapidly pivot, and I actually went back to school for that because I didn't have the credentials. I mean, I did have some few classes in college, obviously, because we do go through those, but I am a type of person that likes to study and like really master my craft. So I basically went back to school. I put myself through school again. Had another degree again. And I from there I got into a really good CPA firm. And thank goodness for that. I was stable. So from there, I kind of learned corporate finance from the whole experience, learning about businesses, how do they grow, what are the needs are, right? I could have been on the whole Wall Street side of things, and then instead I went into like the business side of things.
Wow. And I find that incredibly impressive because I don't think I would have chosen finances under any circumstance, because I took an accounting course once, and to understand that the inputs were negative because it was from the bank's perspective just sent me in a tither, and I went, oh, the whole thing. I'm gonna go start my own business. I get analyst. So kudos to you, and I appreciate it. And I'm sure that all of our listeners that aren't savvy in the mathematical areas of accounting appreciate that you've gone in there too. So let's kind of dive into what it looks like in working with you. What kind of things are you doing for your clients? Because it's not just kind of straightforward accounting that you're doing. It's totally cool.
100%. Thank you for asking that as well. No, we're definitely not we're a very hand-holding agency organization. I'm gonna say that. I have a really nice, tight relationship with my clients. I go to their houses, we have coffee, kind of like those things, we go for lunch. We text each other if we need something urgent. Like it's not like an agency where you have to send an email and then you wait like 3 days to get 24 hours to get that response. You kind of like, and that's how I run it with my team as well. My team knows about what kind of care we want with our clients, but it's not accounting, 100% not. I definitely have that wing in the company where we do have a strong accounting team where they do, like day-to-day entries and payments, reconciliations and all that good stuff, which is very straightforward. But what I do as well is basically figured out how to scale the business, or how to even like trim down, right? Like if the business struggling, like a lot of businesses are struggling right now in the economy, like what do we need to do to make sure that you are staying afloat in this economy? If you have debt, how do we get rid of that debt? How do we structure your balance sheet to better serve the business and to make sure that you are stable in the upcoming years? I also do a few support on like the VC side of things. Like if there's a startup that's fundraising, or a startup valuation, that's another service that we provide as well. So it's a very, how can I say, it's a big umbrella. We provide a lot of the basic and needs for a company as they grow, and also if they want to go into acquisition. And the one thing I like is because I've been part of a few acquisitions, and that's what my passion is about, my passion is like, I see a company and I see a potential and I say, oh my God, do you want to sell it? Do you want to plan for a sale in like 5 years? And that's where my brain goes. Every time I see potential, I'm like, you're doing good. You're like, is intangible assets, reputation. So I kind of, sense the client, and we kind of like form that path. If the next 5 years are going to be about building that reputation, like those numbers are going to get you to a good valuation price. That's one of the strategies that we take as well.
Nice. And what I really like about what you do is that you're working with the partners. So, and I think it fits really well into the name of the company. So how did you come up with Startup Tandem?
Oh my God, you are all full of good questions, Michelle, today.
Thank you.
So it's really funny. I have actually in the background here, back in 2016, I just, I was working for this big company, and startups are very exciting for me. Starting a business, and we also provide that service as well, by the way. We can actually form your business now as well because of the partnerships that we have created. So I just picture this whole umbrella of businesses coming together, helping one another and like supporting each other when it comes to building a business, because it is very tough. It's tough to be out there just to say, I'm going to do something, get out of your whatever you're doing comfort zone, starting it from the bottom up, and scale it and sell it. It's a very, very, it's a long process, and obviously comes with ups and downs. So I just had this feeling about, oh my God, this company is coming together. And then one of my neighbors came and he's like a tandem partnership. I'm like, yes, like that, like a tandem partnership. That sounds great. And then we started like drawing this little sketch back in that year in a little piece of paper. And we draw like a bicycle with like two little tandem. I'm like, yes, like we are supporting each other. And I still have that paper right behind me back in 2016. And that's how we came out with a name, Startup Tandem. But now it's a full kind of, this vision is coming together. Obviously, it takes time to build it. Everything that's good takes time. So now if I work with other agencies, like I said, we can form businesses together. The core services are obviously finance, accounting, taxes in my company. But for partnership levels, we have marketing, we have advertisement, we have formations of businesses, and a lot of those happen under the Startup Tandem umbrella, and also as referrals as well. So we come together to bring the best value price to the entrepreneur.
Nice. I love that. So I want to talk about the kind of financing side of things for a little bit, because I think it's very over romanticized. It's straight, but then at the same time, it seems to me that it doesn't really take a whole lot of tweaks to be able to make something financeable. So talk to me about that. Kind of what is your opinion on that? Is it over romanticized for one? And two, could it be fairly easy to be able to get financing for a company, even though they don't think that they're positioned well for it?
So it's a two-way question. So let's see. Yes and no. It is hard to get funding, especially depending on the type of funding, right? That's something that business owners need to be clear about what they want. Like, do they want, that's number one step. Like, do you want debt or do you want equity dollars? Like, that's the number one. And then understand the risk that comes with both of them is very important. And then two, it's like, are you in that position to even, receive debt funding, right? Because most of the times people say, I don't want to give equity away. I kind of just want to, okay, cool. So let's look at the big picture. It's how I basically draw him up, with debt funding right now, it's not a good time to go that route, obviously, just because of APRs and everything that's going on with the economy. And then also people are being more risk averse, right? So it's not really favorable, but at the same time, you can get funding if you look into like the non-traditional routes, right? Like if you don't go into financial institutions, and if you are an entrepreneur or a small business owner and you only have like 1 or 2 years of financial statements, um, the bank is not going to fund you. Like that's how it is. And if they will fund you, they will fund you like $20,000. Like it would be something that it's not even going to be worth the trouble. What you need to do is like really position yourself, and this is why I keep preaching from like all kinds of podcasts, interviews that I've done. It's like make sure that your stuff is together, like you have your books clean up. It's like it's so important because in a moment that you need funding, investors want to see those financials, banks want to see those financials, all kinds of, so vendors want to see those financials. Like if they want to give you money, they want to see exactly where you are standing. So that's the number one step in terms of like, if you are too small to get debt funding. No, I don't think so. I've been partake about in deals that we use inventory as a collateral. And yes, it is expensive. Cost of capital is expensive, especially nowadays. Like that's something that you have to like fall in love with if you don't want to have equity dollars. But it is possible to get money at a very early stage. It's just going to cost you a little bit more. And just make sure, like I draw a map, right? Like, this is the cash flow for this debt instrument that you're getting into. Can we afford the payment? Like that's very important to understand in the near future, because now you don't now you have to give that money back, right? With equity dollars is different, right? Like what kind of equity do you want partner in your cap table? Do you want somebody that's a big VC umbrella where they're gonna break you or make you? They're gonna dictate the rules, or you want somebody that's a little bit more hands off, and those ones are they're probably gonna take about 5 or 10 of them to get a few checks, right? Because you're cutting less checks, or you want somebody that's gonna tell you what to do and cut a big check. So those are the questions that you have to make yourself when it comes to funding. And those are the process that you have to go through. It's a little bit emotional sometimes. It's not always very logical.
What? Money is emotional? Here we had it all broken down into a spreadsheet, so it was all completely logical. Yeah, it never really works out that way. I think the more logical aspects of your business are the most emotional aspects of your
Yes,
business.
correct, correct.
Awesome. So, I mean, 10,000 questions. I had to laugh because right now in business, and I totally appreciate that interest rates are going up. But I also grew up in an era where I was getting 15% in the bank account on, on a checking account. So, yeah, they could get higher. It does get worse. But let's talk about the emotional aspects of equity lending, because obviously debt lending is, I mean, it's a lot because you're taking it on, you got to be responsible for it, all that kind of fun stuff. But then there's the whole, a lot of entrepreneurs are looking for a mentor and they're like, oh, yeah, so finally I have somebody that's done it, been there, bought the t-shirt, and then they're going to tell me how to run the business. And yay, all of my problems are solved. Talk to me about that.
Yes and no, correct.
And no.
Like a lot of thoughts came through my head and I just answered in 3 words.
That's awesome.
So I see this a lot, and in colleagues and I, and in the industry, we have these conversations. Like, so we see like really great companies that get funded within equity dollars, and uh, as like if the company is doing good, the investor, doesn't have a lot to say, right? But when the company starts going down, it's when you actually see the quality of investor that you have, because what happens is that a lot of these investors do not have the expertise or skill set, or they have never had a company like that, or they are not experienced in that field and they're making all the wrong advice. So I feel like when you're looking for an investor, you have to know, like, you also have to, don't only go for the money. Like, it's kind of like a dating, right? Like, is this person the right fit for my company and myself? You have to date around. Unfortunately, it's a process. You're gonna take some time to get the good partner in your team. It's not just about the money, right? Because when things tank, you want to make sure, like, if you're in CPG, like, what kind of advice am I going to get? CPG is one of the industries that gets like is very linear with the economy, right? Economy goes down, it goes down. Software is not; it's a little bit opposite, right? So, like, if you're in CPG, right, and the economy is tanking you, like, what kind of advice are you going to get from an investor? Are they going to tell you change your systems right away, or things that are drastically going to affect the performance of your business, or are they going to tell you, maybe get rid of inventory. Like, those are the things that you have to think about when you have an investor in your company.
Absolutely. And therein lies the when things get tough thing. So, and talk to me about the kind of improving cash burn. I love the phrase. So one, explain the phrase, and then two, we'll get into the how do you reduce, how you improve it, or how do you reduce it?
Yeah, so no matter what company you run into, like yeah, especially when it comes to CPG, improving cash burn is really important, and it's really hard to obtain. And that basically what just means is better utilization of your revenue dollars, right? Just get more out of $1 of your customer price. Basically, that's basically what it is. And that depends on a lot of factors. That depends on an analysis. You have to do an analysis exactly what your current situation is, who your vendors are. That's very important. Believe it or not, a lot of the times it's who you do business with that affects your business performance and your cash flow. So making sure that if you're doing business with that vendor, are they, what are the terms of that engagement? Are they flexible with payments? Are they providing the need, of your business at the same value of the dollars that you're spending? What is the burn of, like are you currently using them like 3 times a month, 4 times a month? What are you returning on that money spent, right? That's very important. Where are you putting your money, and how are you getting your return on that money? So those are like a few of the things that I have when I come to a company. I come like and analyze. I do like a whole cash flow analysis and say which ones are the big drivers of cash burn, right? In how much is it per month, right? And how can we minimize that cash burn? Another one, sadly to say, right, when economy is downturn, right, and then your business is struggling, it's like look internally, right? What systems or headcount. I'm so sorry to say this. I'm part of those conversations, and I am very ashamed, and I'm not ashamed at the same time. It's kind of like what it is. But what, like, where can you trim down the fat, basically? Because being an efficient operator of a business means looking in and looking out, or where the trims needs to happen, and just make those decisions, and hope for the best. So that's what managing cash is for me.
I do love it because from a business ownership perspective, I have found that during kind of, let's call it a bearish market, that people will, it gives you an opportunity to look at how effective and efficient your employees are. Some of them hate their jobs. They hate showing up, and it's just a really good opportunity to let them fly be free and go and find what they really want to do. And some of them just, it's not really their thing. So again, it's good to let them go. And it allows you for the opportunity to be able to find the go-getters, people that really want those jobs, because oftentimes they're afraid to let go of their other jobs and they just got fired from them. And they're like, hey, I know I don't have the experience. I know I don't have this. I'm willing to start smaller, but I think I have a real passion for that. And you end up finding people that are the real go-getters, and it just fits. Like, you got to understand that it's just because a market is bullish doesn't mean that everything's great in your business. And just because a market's bearish doesn't mean everything's bad. There's opportunities in both. And I think the importance is being able to see that, which brings us to this whole fractional CFO concept. When somebody brings in a fractional CFO, what does that entail and what does that potentially mean for them?
Yeah, so I'm glad that you brought a lot of good points actually, Michelle. So one of the metrics that I like to see is your revenue per head, as your business grows. And not only per head, like per everything, per desk, per asset, per car, whatever you have in that business, in the balance sheet, like how much revenue you're getting per each thing and item. And one of the metrics is per head, because utilization is really important. Are your employees being highly utilized or not, right? Like that's one of the things. And if they're not, how can we make them high, increase the utilization, right? And it's not exploiting people. No, 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 by no means. It's just meaning, if you're making $1 million, or it's the normal metric is 250 to 500 per head. That's how much revenue, a company should be bringing. Like if, in a healthy organization. Obviously, when you're growing, things can get a little not on the metric side, but as you're steady on a very growth level, then those are the metrics that you should be focusing on. Another one obviously depends on the industry, but like if you're in CPG, again, I go back to this because it's really important. It's one of the industries that like really struggles. Like what is your inventory? Like are you are you getting debt to fund new inventory, and how fast are you turning this over? It's really important. Like if you are sitting on cash in a warehouse, it it's just a bad way to run a business, right? Like if you have about $100,000 sitting on your warehouse and you continue to spend buying new product, then you need to understand why your customers are only go gearing into buying new innovative items. Like you need to understand your customer base, and then you need to understand how are you going to acquire new customers to purchase the items that are sitting in your warehouse, because guess what, you need to bring the cash. This is all about cash. Cash is king, right? And I keep saying it all the time. I think I'm like a robot saying this, but as you run a business, you have to make sure that you need to understand, where is my cash being held? How can I bring more cash into the table? Are we growing broke? That's another one, and I see that a lot. And growing broke means basically, is your growth being funded by debt? How are you funding your growth? Or by, investors too, like it's this, how much like are you giving of your company to financial institutions or to investors to grow your business? Because that means that you're not being efficient, honestly. That means that your business is not even owned by you. I've seen some financial statements that the first thing I say, oh, wow, they have 30 investors, they have 3 loans, they have, okay, well, this is great. They don't even own the company anymore. Like if the company goes down, they're not going to see any money. Or if it's, you know what I'm saying, if it sells, like if there's no money for the owner. So those are the questions that a CFO should be making, obviously, and then obviously getting you out of that situation. It's like cleaning up your crap, basically. I'm gonna say like just cleaning up
Yeah.
your mess, helping you be that partner. Because yeah, CEOs do need that partner that help them and say, how do I clean up my balance sheet? How do I clean up my debt? How do I restructure it differently? Maybe I can get it with a better lender. Maybe I can pay this off. Maybe I can buy some of my equity back. How do I grow my company slower but steadier? And it's gonna be with less growing broke kind of a feeling. How do I maintain cash in my bank account? What kind of strategies do I need to make for that? Those are the things the CFO will help you understand.
Nice. Well, and I also think hugely important is that because the CFO isn't emotionally attached to the numbers, that they can look at them a little better and do things like renegotiating interest rates to look at contracts and say, yes, you've gone up 5% every year on this contract. Is that really appropriate? Because the business or the industry average is actually, 10 points below, and you've been overcharging all this time. Like to be able to get that insight and look at things from a different perspective, and to look at things like HR, not just cost per head, but when you're looking at obviously your sales team, they're going to have a higher cost per head than say your admin team, but they're also bringing in the money. So you can't look at them as, it's not apples to apples at that point.
Correct. No, no, it's definitely, it's never apples to apples. And no company is the same as every company, you know, and no company strategy is the same. Everybody has their own struggles and like industry niches, and customers react differently. Like knowing your customer base is really important, like how will they react. But you did mention something very important, and I see this in my industry with competitors, you know, the whole fractional CFO, yes, but I mean, is the company really, like I see fractional CFO charging, you know, clients for like a lot of money, right? And then when I see that, I'm like, well, you're a CFO, you understand that that is not the right money to be spent on you, right? Like that's not, there's a reason why we are fractional. There's a fractional before CFO.
Well, and sometimes it's okay to pay $500 an hour and hire them for half an hour, or to go in and hire somebody else for $100 an hour for 5 hours, because you're doing totally different things, right? You want somebody to look at the problem, go, that's the problem, great, done, you can leave, hasta luego. And there's other times when you want to sit and hash things out
Yeah.
and go like, I just want somebody to listen to me. And you don't want to ever want to pay top dollar for somebody
Yeah.
to sit and listen to you.
Correct. 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 Yes. Yes, but value always for each dollar spent. I always see it like that. Like, all right, am I spending the money and getting that value back? It's all about value
Nice. And
return.
for anybody listening to those numbers, they were completely arbitrary. They have nothing to
Yeah,
do with the time of the
completely.
recording of this period.
No.
A little line underneath going under my head. Crazy. So can you give us an example of a Cinderella story of one of your clients?
Oh man. You know, I don't like to talk a lot very detail about my clients. It's because I like to keep their, you
Call
know,
them Sam.
everything very, yeah, very secured in information. But
Yeah.
what I do, I am getting a lot in just, you know, I started my company with the CFO side and then the accounting side, and then it became this huge thing that I don't even sometimes I'm think about it. I'm like, oh my God, what is happening in this world? But okay, I'm going with it. I'm a true entrepreneur. I'm just rolling with the flow sometimes. But with a plan, obviously. But I do see a lot of this lately because we're expanding into taxes. And taxes is a big area for business owners to make a lot of mistakes. And is a reason why we just kind of fell into this into this area, and now we're exploring and we're growing it just because it does look like there's a lot of business owners out there that do not do their taxes on time, or that they don't even have their financials clean up and in order to do the taxes on time, or that they don't understand the deductions that they can receive, or there's so much gray area in this topic, and that's the reason why we're expanding to it, because I see a lot of challenges, especially to business owners, right? We also help individuals in this area, but individuals is not something that we are expertise on, at least not myself. My team is, not myself. Business is the area that I like to explore the most. So yeah, so taxes is big, it's a big area and room for improvement.
Nice. I love that. And lately I have noticed, and lately being the last 10 years or so, for some people is like, what? I've only been in business a year. For the last 10 years, there have been a lot of tax changes that make it a lot more volatile area to be kind of trying to do it on your own. I mean, and when the changes they make are, 3 inches worth of binder paper, it's not something you want to be doing on your own. And they really are making it trickier. So highly recommend bringing in expertise, even on a short-term basis. Go, hey, what should I be asking you, and what's the best way to deal with this? Because people like you will have industry knowledge of, hey, the best way to solve that is actually by doing X, Y, and Z, not A, B, and C. And they just don't see that.
Yes, and I feel like that's a really good point, Michelle, because the tax, like the tax cuts, drops, all those legislations are continuously to change, right? Like I basically study the tax law almost every day at this point, just because I
Oh
asked
my
my
God,
team,
you
I'm like,
poor
that
thing.
change again? Oh my God. Okay, here we go.
The tax laws are
Yeah,
changing as fast right now
yes.
as computer software. So everything has sped up on the planet.
Everything. Yes. And the worst part is though, that people cannot keep up with it. And certainly professionals cannot keep up with it. So we just have to study it almost every day. But the one thing that I do recommend to every business owner is like do some tax planning, you would be surprised on how much tax planning, like tax savings you can get. Like for example, paying an employee, high salary, study says that employees are not always satisfied with high salary payments. Like you can actually, incentivize them by providing them daycare, if they have kids, by providing them like really good benefits like life insurance. And a lot of these benefits are tax deductible to a company. So you would be surprised how much tax savings you would get in a business as you grow, keep your employees happy, keep productivity going, and not spend that much money out of your bank account.
One of my favorite stories in that regards is there was a hotel that had a ton of staff that had childcare issues and didn't want to start up, or did, like the payment was just getting too much. It's like, we can't do this. What can we do? And somebody said, well, you can start a daycare in the basement because there's retail space. And instead of making, the $1,800 or whatever it was off of renting the space, is let's run a daycare in there. And so they started up an entirely different business and augmented and basically bought time and hours. And it was beautiful scenario because the kids were right there and you could go and talk to them during lunch and do whatever. And it was perfect. It was a brilliant idea.
And I'm pretty sure that a parent that can go talk to their kid on their lunch break will be very happy.
Right? And you don't have to drive 3 hours to go and pick up your kid before you go. Like so many advantages. And it's just a little bit of thinking about the options in the scenarios and what can happen and what makes more sense than just doing it kind of linear thinking. I am loving this conversation. I could do it all day long, as you know. So I know our listeners are going to want more from you. How did they start their journey with you?
Oh, whatever way you want. You can send me an email, alejandra@startuptandem.com, or go to my website, leave a comment, the phone number is there. I'm usually the one answering if I am not on the meeting, or one of my teammates. But yeah, it's very simple process. We basically have a conversation on where your current situation is. Like I said, everybody's different, right? And we're not a one size shoe fits all. It's kind of like we're custom made, tailored everything according to your needs. As long as it makes sense to you, makes sense to us as well. So that's basically how it is. We kind of like do a scope, make sure that you're a right fit for us as we are a good fit for you. Because, like I said, it's like we're dating, right? It's like a dating experience.
And I want to point out too, there's a ton of information on the website regarding the different types of businesses, whether you're SaaS, crypto, law firms, dental firms. There's a huge variety there, and being able to kind of go and get pinpoint the information that you have, or be able to ask generalized questions to be able to kind of work with your business. Love all of that, of course. So peeps, we will of course have all of Alejandro's links in the show notes. Go scroll down, go link on those, open up in a new browser, of course, because we're not done yet. So I get to ask you, at what point in life did you know that you're especially kind of crazy enough to think that you could become an entrepreneur?
Oh my goodness, thank you. At the age of three, my father taught me how to do a handshake when I was 3 years old. I still remember like it was yesterday. And he taught me, he said, you look in the eye and then you grab the hand very strong. And I was like, okay, Dad, because I come from the background, and he put me how to do inventory, when I was really tiny as well. So I owe a lot of my entrepreneurship to my father and my mother. They were both very entrepreneurs, very different entrepreneurs, one more risk averse than other. My mom was in finance. I always knew in my head that I wanted to have my own business, but it was just knowing exactly what kind of business I wanted to have. And that's why I went, this route of education, experience, and learning through, other companies to do my own thing.
Nice. I love it. Well, and you bring up a great point, is that a lot of the kids growing up through the lockdown don't know how to shake hands with people. They've never learned because it wasn't important. It wasn't something they did. And it can be slightly terrifying to shake somebody's hand, look them in the face, say their name, remember their name.
Yeah.
Like,
yes.
Oh yeah. Don't worry. We've all done that, been there, bought the t-shirt, and you'll learn too. That was awesome. I love that. You've been awesome. Any last words for our peeps?
Oh, thank you, Michelle. No, I really appreciate the time here. I really do. The questions are great. Very enjoyable conversation. I would just tell everybody that's out there, ready to start a business, just go do it. Like, this is just one life that you have. And if you be living multiple lives, and this is the one that you're living right now. And so just go for it. make sure that you have a plan, and make sure to know that the plan will not always be followed, but and to always pivot, but and then you have the right partners in place. That's very important.
Nice. Thank you, Alejandra, for your time. I appreciate it immensely.
Thank you.
Peeps, this is Michelle Nedelec. Thank you for being here with us today. Be sure to subscribe to the show and share it with your friends. We love helping entrepreneurs grow. Thank you for listening to 7 to 8. If you're interested in upping your speaking game, be sure to connect with our guests with the links in the show notes, and connect with me to see how we can help you get your tech done for you and help your speaking dreams come true.